So we're here to talk about Regeneron. It's a $700 stock, so I guess they don't like stock splits. The last number I have for shares outstanding is 115. That might be a little stale, but I think it's around the same, and we'll freshen that number up in a second. So around an $82 billion market cap. This makes it like a top 15, let's see, maybe the number 13 drug company in the world. So pretty impressive. They're right here in New York. They're in Westchester, the number 17 drug company in the world. Ahead of some like pretty old companies like Merck and Takeda. So, you know, really impressive company. And they didn't do it through like mergers. They did it all organically. They're an antibody specialist. They actually have a decent sized balance sheet here with about 15 billion net. So the actual enterprise value is only 66 billion. It's a really interesting company because they have two big drugs. They have a lot of other stuff. We're kind of going to just look at the three buckets. The first bucket is an eye drug. It's literally a shot in your eye called Eyelea. And there's some issues with Eyelea. We're going to go through this. It's been their workhorse for a long, long time. They put you to sleep, they put you to sleep for the shot. Put you to sleep is probably not the right word. You're under anesthesia, so you can't feel it or anything. And it prevents blindness. It's an amazing drug. And is the best product of its kind, mostly. The second bucket is Dupixent. This is one of the best drugs in the whole world. I mean, this is maybe one of the best drugs ever invented. Maybe top like 3 best drugs ever. And that's just my personal, there's no like, that this isn't there's no way to quantify that exactly, but really one of the best drugs ever made. And so this drug is for, in essence, part of the immune system that's overactivated, specifically can result in kind of these bunch of diseases that are clinically different, but very much the same. So the major one is eczema, but also certain types of asthma and many other diseases. So Dupixent is shared with Sanofi. Eyelea is shared with Bayer. So they would have been an even bigger company. They would have been Pfizer-sized if they kept all the drugs themselves. They'd also have to learn how to sell in the rest of the world, which would have been difficult. The third is they have a bucket of commercialized drugs as well as in development drugs, and none of them are particularly great. So it's hard to top something like Eyelea or Dupixent, but, the company's unbelievably productive. They've gotten a lot of drugs FDA approved. They're pretty sharp management team. And just a matter of, what will they sort of do next? And, lately I have to say they sort of been like, it's been cold for them, but I still think that they may very well kind of like be valuable or not. Those are the 3 buckets. And then we have to sort of do a careful analysis. We're going to have to look at Eyelea. Let's start sort of there. But I want to show you that like when I look at these companies, sort of how I do it, it's kind of a weird, very like slow way of doing things. So this is like, I'm going to show you the way to do it if you have like all of the time in the world. If you don't have all the time in the world, this isn't probably not the way to do it. So I get the PDF and I'm basically just going to delete using Acrobat, delete the PDF as I insert the data. And this is like super laborious, but like it basically guarantees that you know everything about the company, which is really important. If you want to be a star, that's the way it's going to have to be. You don't have to go in order or anything. Maybe going in order is not a bad idea. So what's the deal with Eyelea? Well, here's a little blurb, at least about Eyelea. For the fourth quarter, sales of Eyelea HD and Eyelea increased. So what's exactly is Eyelea and Eyelea HD? So HD stands for high dose. I happen to know that, but how would you go about that if you didn't know that? Well, one of the things I like to do is go to this website, drugs at FDA. If you can't see the URL, it's accessdata.fda.gov/scripts/CDER/DAF, which is drugs at FDA. If you can't remember that, just Google drugs at FDA and you get this website. I'll put the link in the chat. And so one of the things I like to do with every drug a company has is I at least want to jot down when did it get FDA approval. So let's start that with just good old Eyelea. Eyelea was approved in 2011. So in terms of drug years, like dog years, in drug years, that's kind of old, right? That's 14 years. Drugs will either basically get naturally competed with or they'll go generic somehow. One way or another. It's over. It's Jover. So just something to keep in mind. Let's see here. Regulatory. It's kind of fun to put data in here. So like one piece of data is the BLA number, which is kind of funny. The BLA was approved 11/18/2011. And like I said, it's an intravitreal. This is some of my old modeling from like 2007. So this is a old file. This file's older than some of you guys. So Eyelea HD, this is 8 milligrams? Yeah, so this is 8 milligrams. And when you do this, you want to use like a JSON system. If you don't know what JSON is, it's JavaScript object notation. And it's sometimes called like a key value pair. And, you know, we're not doing an official legal JSON, but the idea is the same, which is that you have a key and you have some values. And you should basically always have that JSON style, in my opinion. Why? Because every drug company is the same. And it's a really beautiful industry for that reason, because you can basically just have the same keys for every company. And you just sort of mentally do that. But I think basically, you know, you will succeed if you use this method. So HD was approved in 2023, and it's twice the concentration. But that's not going to keep this drug from going generic. So that's sort of the big problem here, is you're dealing with a 14-year-old drug, and you know it's lived past its years basically, and generics will be, you know, so there's a lot of ways to put data down. I like JSON, I like OWL, RDF schema, but freeform Excel is fine. You know, with some of the other tools, you can actually do queries across all your documents. So that's when HD was approved 8/18/23, and we just have that there. So while we're here, let's just like pop in some of these other ones. I actually think Dupixent, one of the appreciated problems with Dupixent is Dupixent could be going generic in like 27 to 35. Either way, it's not good for Sanofi more than Regeneron, but it's not good for either. And it's funny because when I say here, I used to say that what's an intellectual property? Well, it's an antibody, so it can't go generic. Well, those times have changed. Biosimilars are almost as bad as generics. So it's a big problem, for example, for Merck. Okay, so we got Dupixent down. We're just going to go through each one. 𝗬𝗂 is their cancer drug. I almost separated 𝗬𝗂 out because it is quite valuable, but let's leave it as a part of that other category with those three, the third bucket that just mushes every other drug. And so 𝗬𝗂, and you know, learn how to use the tabbing in Excel. So it's very handy to tab between drugs. Maybe one of the values you get out of this is you do memorize some of these things, which is important if you're trading. If you're trading and there's bad news, for example, or good news, or just news in general, you know, you want to react quickly. So one of the examples is Meta. Meta was going to announce the information, or the information was reporting that Meta was going to have a $200 billion AI spend. That's immediately, your reaction should immediately be buy NVIDIA. You know, it's all money going to NVIDIA. Buy NVIDIA, buy TSM, buy ASML. Like that second, and you would have made money. And in fact, NVIDIA went up right after that. So in any event, it's like cutaneous squamous cell carcinoma, I think. It's funny, Kramer used to just point at people and say, like, Taiwan Semi's having a bad quarter. Who is this bad for? And if you didn't have the answer right then and there of like the whole supply chain of who it was bad for, you had to be ready. I remember when Kramer's partner said, what percentage of revenue is Avonex for Biogen? And I was like, 95%. He was like, what? They have one drug. Zaltrap is an insignificant drug for these guys. 𝗫𝗓𝗏, also kind of irrelevant. 𝗫𝗑𝗫𝗓𝗫𝗑𝗫𝗓. I don't know why they even made this drug, to be honest. This one's a weird one. That's what I mean about them kind of being a little cold lately. Praluent has potential, but it's also kind of been a dog. Maybe, you know, I like to organize these by revenue, which is not currently the case. Maybe do it by age. And the nice thing about this is that Regeneron, because it's such a big company, it touches a lot of other companies the same way Pfizer would or whatever. So there's another company that sells ARCALYST called 𝗫𝗏𝗏 or something like that. You know, they have a business relationship. So it's just something where you can learn about other tickers you can trade, so to speak. Okay, so that's by age. And again, we can see the last 3 drugs they put out, kind of only one was that really interesting. So, you know, it's hits and misses. That's nothing, not to read too much into that. So we have a good sense for that. So Eyelea and Eyelea HD increased 2%. So almost no growth. Yeah, it's a pretty mature drug. Yeah, we almost bought 𝗫𝗏𝗃𝗧. I'm sorry, we almost bought ARCALYST, or at least we started the conversation. And I honestly, you know, what they've done with that drug is really surprising, because we didn't think you could do that much with it. But I do have to follow up with that company and see how they're doing. Okay, so I'm getting I'm not getting the right number, which is always a little concerning. Now I see why. It was shifted over 1 quarter. And we can see up 2% for the Eyelea family, which is both Eyelea and Eyelea HD. That's the Eyelea family. And I think the generic does have to do a new application for HD, but I'm not 100% sure. We'll dive into that a little bit closer. So that's the Q4 results were 1.5 billion. 305 million of that is from HD. They may have a patent for HD. I don't know exactly, but you know, so they've moved some business off of Eyelea to Eyelea HD. I don't know if they get a little benefit for that. Wow, FDA removed the REMS for clozapine? Unbelievable. That was another drug we were going to buy. So the full year sales were up just 1%, which is like really, really low growth. And Eyelea itself was down 17%. But like I said, this drug had a great history of growth, basically one of the best drugs of all time. For the full year, they did 1.2 billion. And again, I want to be comprehensive. So I could see here that I don't have a 2017 Eyelea number. It doesn't take long to go to their 10Q. So I'm going to use Godel. I'm type CF and hit enter. Same exact thing on the Bloomberg terminal. And I'm just looking for their 10K from 2017. So it's a long time ago. I can scroll and I'm already there. Cool. The 2017 full year 10K would have been filed in 2018, early 2018. Here it is. And that's it. I can now just quickly find that and put it in the model. That was really easy, actually. And it's got all 3 prior years, which is even better. I didn't even have to go to the SEC website. Now we have all the years of Eyelea. This is really valuable because I'll give you an example of how this is really valuable. So let's say you're looking at a biotech company and you're trying to figure out, is this company going to sell $5 billion down the road or $1 billion down the road? You're looking at like the second quarter of sales. And you say, well, Eyelea sold 800 its first year. So what are we on pace to sell our first year? And you can kind of get a sense for really, really good. You get a sense for, you know, what the future may hold if you look at those trajectories. And this sort of allows you to say things like, well, there's never been a drug that has sold this much if its first year was this much. And here's an example with Dupixent. Dupixent's first full year was actually a little slower than Eyelea, but its second full year was like almost double, and its third full year was more than double, and it ended up being, you know, quite a bit bigger than Eyelea. So watching those early trajectories is really important. It's just like a trajectory of, I don't know, a bullet or a ball being thrown or something like that. But we have to line up quarter for quarter. Just lining up year over year isn't perfect. We have Eyelea outside the rest of the US. I'm sorry, outside the US. Biosimilars kind of go there the fastest. So pretty good system here. Again, tempted to fill out the rest of the model because it's the only thing we're missing. Okay, yep. So they, recording in revenue from Sanofi, their business partner. They had a very weird sort of convoluted deal, but I think it sort of ends up being a 50-50, but very weird and convoluted. Again, you can see the annual revenue growth of the company, just total revenue, for the whole company, really potent increases. Somebody asked me the other day, how do I find the next 100-bagger? This is in our Discord. And I had some really interesting observations, I think. One of the ways to find the next 100x, which might have worked for Regeneron, maybe would have given you a sort of a 10x or 25x, pretty good, is to go up 50x or 25x or 100x, like Palantir or whatever. You basically have to have revenue growing every year. So what I would do is I would try to find any company that had consistent revenue growth of 10% or 20% every year. There's never really been a company that got to $1 trillion or went up 50x or 100x unless they had that revenue growth. It doesn't come all at once. It's like Apple. Nobody thought this third tier, eighth place computer company would end up becoming, the world's biggest company. It was just as likely that Dell or Hewlett or someone like that, Lenovo, would have happened to them. But in reality, it happened. And so the question is, how do we see that in the future? And the answer is, it's hard to see it in the future because you don't know, there's a couple of, that conversation is many hours long. One of the things you can do that's a lot easier is you can see it in the present. And seeing it in the present is not so bad. It's a lot easier, right? Looking for a company that's had consistent annual revenue growth every year puts you in this category of like growth stocks that could be good or bad for you. But one of the things that'll end up happening is you look at this list and you say, oh, that stock's already doubled. Or that stock's already gone up 10x, so I can't touch it. And of course, that's sort of silly. If the stock's gone up 5x recently, you might say I missed it. But then it goes up another 20x, and you would have been better off. And again, Google, in their early days, they grew every quarter. They grew revenue 30-something odd %. And so I don't know if it's a valuable insight or not, but I think it's okay to jump on the train a little bit late as it's leaving the station. It's really not that punishing to, how many of you looked at Apple and said, wow, why is this stock up so much? It's such a rocket ship. And then you feel like you missed it, but you didn't really miss it. You missed it again because you thought it was too expensive for you. And you missed it again. And that's the kind of thing that will keep you poor. Now, again, jumping into any old growth stock as it's going up will also leave you as a bag holder in many situations. Like technically the formula I'm giving you 𝗂𝗏 would qualify. So you just have to be pretty smart about how you handle everything. So anyway, look at this. Regeneron, not 1 year of negative revenue growth. If you remove COVID, Regeneron had revenue growth every year for the last 14 years. And I don't do this often, but we could actually just put the year-end stock price here as well. So you can get a sense for, well, when was it obvious to investors that what happened would happen, I guess? Or when was it sort of obvious to investors that this was a different kind of company and really special? Okay, so you can see here that in 2011, the share price doubled. Okay, the next year, check this out. The stock went up to 170. Crazy, right? So what was the revenue? They barely had any revenue in 2010. So down here, we'll count the baggers. All right, so the next year, the stock went to 274, up 60%. Now an 8-bagger. And again, you'd probably say, oh, I missed the boat. It's over. It's so over. I can't believe I missed the boat. Now let's look at the revenue growth too. They basically didn't have any revenue this year. It's funny, the revenue growth and the stock price growth paralleled each other quite well. I'll put both in bold so you can see those. Next year was 409. Another 50% increase in the stock price, but more interestingly, you know, it's a 12x because at that point, because even though the stock price jumps 50%, it's jumping 50% on a higher base. So now we're up to a 17 bagger, and that's in 5 years. Crazy, huh? But again, you know, if you just waited for that first big year of revenue, or even 2 years, that first two years of revenue, I mean, you still had a 3 bagger, so 3x, which is pretty good. That beats Warren Buffett and Renaissance. But again, you can see that a lot of the expectations baked in very fast. You know, it's hard to beat the market's quick analysis. 2016, this was just a bad time for biotech, I think. Slight rebound here, still only an 11 bagger if you caught it early. By the way, this success sort of surprised Wall Street. So like 3 flat years here, even though revenue had grown each year. This happens a lot where you're just waiting. We've all been waiting sometimes for some trades to work out, right? You just wait and wait and wait, and you wanted smooth performance, but instead you get this very lumpy performance. Again, another year, flat year, still had a lot of revenue growth, and then it sort of all shows up at once. Now we're up to a 15 bagger, still not at the all-time high, mind you. Now we go to 630. That's, yeah, new all-time high, 19 bagger, 19x your money. And then 720, which is roughly the price now, 22x from product launch, 877. Even though they're primary drugs going generic, and that was the top, a 27x. 27x. 27x changes your life. You know, you put 100 grand in that and you have a 2.7 million or whatever number of zeros you want to use. And maybe the ride still continues. I don't know. But you can see that the revenue growth sort of paralleled for at least a while, first 5 years, almost completely paralleled the stock price growth. And then you sort of had this weird choppiness, but you still had in this period, a rough doubling of the stock price while revenue doubled. 27x at peak. How could you have told? I'd say if you looked at the launch of 2012, here are the first 4 quarters of 2012. If you look at my drug database, which is in the GitHub, you can see that if your 4th quarter is $244 million, that's already a blockbuster. You can basically tell what the future will hold. Here's my launches model here. So if your 4th quarter, the average 4th quarter, let's make sure we exclude, and then maybe exclude Hep C too, because Hep C is a weird one. Average blockbuster was 292. But for the 4th quarter, excluding things like HIV, the biggest drug of all time did 110 its 4th quarter. Many of these drugs are like, I mean, look at Keytruda, is now the biggest drug, did 110 as well. Januvia, Zyprexa, some of the industry legendary drugs, Gardasil, very few drugs. Viagra did 190. Viagra didn't have a great curve for what it's worth. Mounjaro did quite a lot more, but Mounjaro may be the biggest drug we ever see in all of pharma. Most drugs are below that. Most drugs were below that. So only a handful of drugs ever in the history of medicine, their 4th quarter had 244 million. This doesn't count, it's COVID. HIV, all the, like HIV, Hep C doesn't really count either. So Lipitor, Ozempic, these are the only drugs that had more sales. Ibrance, which would go on to do many billions. Shkreli, again, a $10 billion drug. Gardasil, which got up there as well. And that's it. It's only like 4 drugs in the history of pharma that sold that much that quick. And you can look at that and say, this is going to be a massive drug. This is going to be a massive drug, and therefore this is going to be a massive company. And they did the same thing with Dupixent. So you had a really sort of obvious long in 2012. You just had to be ready. You couldn't have been ignoring it. And here in 2012, you could have gotten the stock for somewhere between 55 and 171. So I don't know if you average that, that's 113. So you could have gotten the stock at 113 and made 7 to 8 times your money, which, you know, let's do the rate of return. So 10 years, 0, minus 110, whatever this number is. Yeah, it's a 21% average annual return, which is quite good. But, you know, it's 21% compounded. Market falling a little bit, 30 basis points, nothing to worry about yet. And that's what's nice about these kinds of companies is they provide like long-term steady gains. Okay. So let's try to figure out what the future holds for Eyelea. And I'm just going to, I wonder how to do this best. You know, let me try our new feature here. Let me try NI Eyelea. Let's see how this goes. FDA, this worked really well. Because I want to do research across all stocks. It says here, FDA accepts Teva's application. Teva's the biggest generic company, basically, for Eyelea biosimilar. So they're basically filing for FDA approval. And they expect approval by the end of the year. 5 biosimilars that reference Eyelea have been approved by the FDA. Amgen is starting to sell one. Amgen is selling Pavblu. So with 5 biosimilars, you can tell the pricing is going to get pretty ugly. Not really sure what this article is saying, but so when will they launch is another question. But Amgen's already launched, so you might see some really bad revenue for Regeneron in the next couple quarters. Here's another. This is oh yeah, Stelara. Yeah. So this is Stelara, which J&J expected. That was expected. But we sort of want to see what some of these generic companies say. When will they launch these first generics? Okay, so I guess they're just basically going to be losing Eyelea right away. If Amgen was willing to just launch at risk, which means, you know, they could be held liable in court if the judge feels like the patent was legitimate, then Amgen, usually you wait until you win your court case. But Amgen's is going ahead anyway, which is quite a bit risky, because you might have to pay a lot of money, in fact, treble damages. And, you know, Regeneron had a lot of time to replace Eyelea with some other product. And, you know, they didn't. So that's sort of a, you know, maybe a bad mark for Amgen, for management. Makes you wonder, you know, why didn't they do anything else? But nothing else really came out for AMD anyway. So they made their money. They did quite well, but could they have done more to preserve that franchise? I don't know. Here's the press release. So this was November. Amgen launches Pavblu, the first Eyelea biosimilar. The judge denied a temporary injunction. That's going to be pretty ugly for Regeneron. Yeah, ROP is a very small market. And the rule is that if a generic is approved for one indication, you can use it for any. Okay, so I'm going to model that. This is going to get a lot worse than I thought. So the Eyelea in this model is all US. So I can't imagine that it doesn't drop. I mean, it already probably felt some drop in Q4, but I would think this is going to drop 20%. What do you think, chat? It's one-on-one competition with Amgen. I wonder if Sandoz jumps in, or there's 5 technically can go right now, all 5 drugs. Now, the thing is, it's not going to matter that much because the net present value of these cash flows is temporary. We know what's going to happen to the slope. This will atrophy like very quickly. If it drops 15% quarter over quarter, it's basically half gone. Now, HD won't be generic, but you could just give 2 shots of the 4 mg Eyelea instead of... Can't you just draw up a bigger dose too? So it's less concentrated, I guess. Okay, so we have Eyelea modeled. Maybe we model the HD gaining some market share. It's hard for me to know like what ophthalmologists will exactly do. But so now we have 2025 numbers, and I think they'll just do a formulation that's generic here too. Okay, I think these forecasts are fine. Okay, so you basically have Eyelea disappearing. The area under the curve of the cash flows left is still 20 billion according to this. I think it's got to fall faster than that. We got to take a look at how fast. Well, it's not just the initial curve, it's the whole curve. You know, we want to see every piece of the curve. Okay. Okay, so they have Libtayo here, 12.7, 1,217,000,000 revenue. And that grew 40%. So pretty robust for Libtayo. Maybe I'll put it in here. Like I said, I was debating whether it make it a fourth pillar for the company. Because if you think about it, 𝗫𝗫𝗄 is worth, I mean, what is 1.2 billion of pharma revenue worth? I would say 10 billion. So you have 10 billion from that. And now for Eyelea, just this dregs of what's left, right? From the generics of Eyelea. And I'm going to lower it a little because it's still too much for me, but I'm going to lower it. Just what's left of Eyelea will still be 17 billion. Yes, Abdel, very soon. 17 billion. Now, if I discount that, it's going to be less. You know, most of it's coming soon. Let's call that 10 billion plus 10 billion. So you got 20 billion from 𝗫𝗫𝗄 and the residuals of Eyelea. So you're really paying 46 billion, okay, for Regeneron. Well, what is Regeneron without 𝗫𝗫𝗄 and without the rest of Eyelea? Well, you have the Sanofi payments, and those seem to add up to well over 40 billion. You have some Bayer payments left, which I didn't even count, by the way. You know, the Sanofi payments are Dupixent, so really, you're more or less getting a discount on Dupixent, but are you going to get anything else? Is anything in this pipeline worth it? I think that's the struggle with Regeneron, is there's not really anything there that's that obviously great. It's been rough for them. Okay, so they did a dividend, which is a little cringe. Authorized a bigger buyback. They've been buying back shares like crazy. They should have been buying a pipeline